hopefully getting the lawsuit dealt with on April 27th, as well as having the next earnings call on AMC May 5th. AMC had just broke record revenues for a weekend at our US theaters on Easter weekend thanks to strong attendance and superb food and beverage sales. 3.6 million people watched Mario, Air Jordan, and more stories on the big screen at AMC. The path to recovery continues. Plus, Super Mario Bros. Has hit a new record for the biggest opening weekend of an animated movie in history, surpassing the 358 million global opening of 2019's Frozen 2. Now, I thought this was absolutely savage. We went over a few tweets from Investor Turf, but they are absolutely smoking Citadel over here on Twitter. So if you don't follow them, go follow them. They go, only 6 hours remain. Almost 10,000 voters casted their vote. And the vote is on, do you think Citadel Securities should be banned from the stock market and Ken Griffin should be investigated for fraud? They tag Citadel Securities and say the situation does not look good. It is becoming very evident that retail investors do not like your business. All you need to do is stop lying and pretending that retail investors support your business model. Be honest with yourself. However, you are lying to the general public and your own investors that your business is performing well. Despite this, you received bailouts twice with cash injections, a $1.15 billion cash infusion, and a $600 million loan. From what we are seeing in the information that the public is sending us, it seems like you guys are secretly trying to obtain more money, but according to yourselves, the business is doing great, just like Bernie Madoff said to the investors. Remember guys, Citadel has a crazy sheet of securities sold not yet purchased, yet they claim that their business model is doing absolutely well, and Ken Griffin still keeps a smile on his face. But this is exactly what the Lehman Brothers did. This is exactly what Silicon Valley Bank said. This is exactly what Credit Suisse said, when all of them were actually in a horrible, horrible situation. All right, now let's jump into AMC's chart. We're trading at $5.28 currently as I'm making this video, up 7.76% on the day. Now, I did call out that I expected AMC to have a retracement and get a new relative low by April 12th, which is Wednesday of this week. Instead, we got another gap up. We're not at that date yet. However, I did want to point some things out as AMC could go higher, and let me explain. So I thought we were at the point in the cycle based on the time frames where AMC would actually reach a new low. It seems like AMC might have actually already done this. This is exactly what I want you to pay attention to. I want you to pay attention to the green boxes, not the white boxes. The white boxes are what we track when AMC actually has a peak. Now, the green boxes are where I thought AMC was going to go, and in multiple scenarios, it found a lower low. But actually, I think AMC does have the potential to keep ripping, and I may have been wrong. However, I definitely don't want to completely void out what I said. The only reason that I thought this is because this happened so fast, this flash crash to the downside, right? All the way from $5.20 right down to $3.90. We basically gapped down in one day, so I didn't think that the sell-off was necessarily over, and we also didn't make a new relative low. And every single time this happens, you see a relative low beyond the next cycle. With that being said, this could just be an extended cycle. Take a look at this one and how this one didn't necessarily make a relative low in the time frame, but it kept dipping before essentially getting that extra rip in the white zone, right? So that is something that could potentially play out right here and may delay the time I actually choose to purchase calls leading up into that white box. Okay, so this is something that we're gonna have to further chart out, but I just wanted to point that out to you guys. Moving on, touching on GameStop's chart, we're trading at $22.13, down 1.21% on the day. GameStop, it is literally just taking everyone out of their contracts and kind of wasting time, right? From a hedge fund market maker perspective, there's so much liquidity expiring late April that they are just dragging this thing out with low volume. They're letting GameStop drag out and they're not letting it make a move. They're just keeping the volume the same. They're keeping the price the same until all of these contracts expire and the liquidity fairy gets pumped with more money. Now, a rejection on $22.30 is the most ideal. Coming down, retesting this parallel channel right around $21.43, which is the next spot I think we're going to come down to. And essentially just ping-ponging until they let this thing break one way or the other. If we break to the upside, I would watch for a rejection right around $24. If we break to the downside, I'm looking for that gap fill still at $18.30. GameStop is simple. It's just waiting to make a move. I'm betting short-term downside as well as short-term downside for AMC. But the Ortex numbers say otherwise. According to AMC or text numbers, 25.12% short interest, utilization maxed out, shares on loan still nearing that all-time high level, cost to borrow average sitting at 817% and the max at 855%. As for a 5.67% short interest, utilization 74%, and the cost to borrow not being reported over on Ortex. As for Stonko Tracker, for AMC, 0 shares available to borrow at a most recent fee of 390%, and we are winning on the options chain, 48,000 calls compared to 7,500 puts expiring in the money. However, there are a lot of puts out of the money as of right now. If AMC does continue this week, that is good trajectory for next week because the options chain is looking heavily loaded for next week. Around 400,000 call contracts and around 700,000 put contracts to almost 800,000 actually put contracts expiring next week. So next week's options chain, whatever the price is leading into next week, is essentially going to cause a gamma ramp one way or the other. And I think AMC is going to be very volatile going forward. Keep your fingers crossed because the cycles are playing out a little bit different, and we do have CPI, which is definitely going to affect the market, affect shorts, and affect AMC and GameStop. Stonko Tracker for GameStop, before we get into some important stuff, 40,000 shares available to borrow, most recent fee 11.5%. We're losing on the option chain, 3,000 calls compared to 5,000 puts, and a lot of people are betting bullish next week for GameStop. 120,000 calls compared to 78,000 puts out of the money being bet next week on GameStop, so pay attention to that. And apparently, a platform that Matt Kors has been pushing, Public, is lending out shares by default without even asking. So you have to message them and actually tell them you want to opt out of share lending, or they're lending your shares without even telling you. So if you guys own Public, let me know if this is happening to you, or if you don't even know if it's happening to you in the comments down below. Speaking of that, if you want a different broker, a better broker, download Moomoo, make a deposit using my link, and you're going to get up to 17 free stocks, legitimately free money, plus free level 2 order book data, access to trading options, going long, going short, and more. Also guys, join the Discord, linked under the video. Don't sleep on the Discord. Cinemark price target was just raised to $20 a share from $15 a share by B. Riley Securities. Now what a coincidence, right? All this commotion about Cinemark, and they get a $5 raise in their price target, creating a much higher valuation for a random company that had basically no news. Now we talked about it, and we actually got the gap fill on Cinemark all the way up to about $16.20. Exactly like I said, the risk to reward wasn't there for me, but like I said, if it happened, it'd be a 5 to 6% day and we'd get the gap fill. And that is exactly what we got. In no way, shape, or form would I jump into Cinemark right now, not even on that price target. I think it's a trap for retail. They're going to get retail to buy in, think it's a play, and they're probably going to try and get some people to switch out of AMC, which is not going to happen. I think Cinemark is going to retrace back down to $14.35. That simple. That's my outlook on Cinemark. This is essentially a trap in my opinion. Watch for a potential base at 15, but I still think this thing has to cool off even further. As for the S&P 500, we're trading at 408.27, down 0.2% on the day, and today we're looking at the fib retracement because this is looking beautiful. It came up, tested this, got smacked, used it as resistance, broke back over, and I think it still has to come back down and base on this before getting another rip. I'm watching for a base at 404. I think the SPY is going to come down at least coming up to Wednesday and base off of 404 before getting another bounce or sell off even further. Yes, I still stick to the SPY, finding a new relative low. I know at this point there's a long way to go to even find that, but I don't think this is priced in. It just doesn't make sense the way banks are moving, the way the economy is moving, so on and so forth, which we're going to touch on in 1 second, which we're going to touch on right now. U.S. bank deposits fell by nearly $65 billion last week. This is the 10th consecutive week that deposits have dropped, yet no one is calling this a banking crisis. What happened to every other banking crisis? The S&P 500 did not stop falling. In no way, shape, or form, I think it is done right now. And not BlackRock, which has earnings on Friday, but Blackstone again blocked withdrawals from its $70 billion real estate income trust. If somebody is so secure and safe, why would they be blocking withdrawals from a $70 billion real estate income trust? Is something about to happen with real estate, or are these institutions just in a very tough situation on how they hedge? Speaking of these institutions, KPMG, Goldman Sachs, and Morgan Stanley are being sued for their roles in Silicon Valley Bank collapse. KPMG signed off on the annual report just weeks before SVB collapsed, and Goldman and Morgan Stanley underwrote SVB's stock offerings. Now to close out the video, after China surrounded Taiwan with fighter jets, ships, and carried out fake precision airstrikes, China also practiced blockades on the last scheduled day of Taiwan drills. Now, following this up, they basically said, we're done with drills. Why all of this for absolutely no reason? This is sketchy. sketchy as fuck if you live in Taiwan, and just sketchy for World War III or the potential of a World War III. But you guys let me know what you think in the comments down below. So let me know on your outlook on these stocks, on the economy going forward. Do you think the SPY is actually good enough to enter a bull market for the next 10, 20 years? Or do you think it's going to find a relative low? That's it, guys. Make sure to check the links. Get your 17 free stocks. Pop in Discord. Check out the merch. I love you all. Lottery Stocks out.